William, it's good to have you back. How important do you see this level here, the 50% drawdown from the highs?
Well, I'd say a few things about that. First, if you look at the halvening, the Bitcoin halvening, which began in May 2020, and frankly, typically the upswing in those happens for about 18 months, which would have been November 2021, right around where we peaked at about 65,000. We've come back from there to roughly 33,000 today. That is not unusual for Bitcoin to retreat after an 18-month period of going up post-halvening, but it should have stabilized somewhere between high 40,000s and maybe 50,000s, except for a couple of both geopolitical and governmental impacts that have hit in the past, let's say, 30 days. Those drew it down from roughly 50,000 to where it is now.
Right. Your point about large drawdowns not being new is a good one, and one that we keep in mind when we think about wicked price action. But the backdrop of reduced liquidity, certainly policy, less stimulus, rates going higher, not being near zero, that is a change from those prior drawdowns. Does that not mean that this time may be different, that stabilization may be tougher to find?
Well, first, I'd say since 2016, we always forget this because Bitcoin moves so fast up and down. But since 2016, Bitcoin, in any given rolling 90-day period, has dropped 50% or more 14 times. So it's not unusual. There's always different factors that drive it. I do believe, though, what you're saying, there is something to it. In the most recent bull run, let's say from 2020 mid to now, Wall Street and a lot of other institutional investors got into cryptocurrencies, particularly Bitcoin. And I think what we've seen happen is they looked at Bitcoin very much as the way they would look at, let's say, a IPO, a recent IPO of a tech company that was still unprofitable, high risk, a lot of growth potential, but also a lot of potential for downside. And so when the Fed started tightening its monetary policy as a result of wanting to control inflation, and they de-risked, I think Bitcoin was one of the assets that in their models was classified as a tradable asset they would also like to de-risk. So that is new. Historically, for people who were in Bitcoin and other cryptocurrencies, it was looked at as an alternative or a hedge against these types of movements. But with a lot of Wall Street money in crypto now, it's behaving the way a lot of other assets that normally behave when the Fed tightens monetary policy.